Hello student, this video will include Learning Objective 5 of Chapter 7 regarding prepayments and filing requirements for taxpayers. For the IRS, taxes are pay as you go, which means when you earn it, you need to pay it. You cannot delay it until the last day of filing. When taxpayers don't pay enough taxes during the year, or when they are late filing their tax return or late paying their tax due, they may be subject to certain penalties. Prepayments. The tax must be paid via withholding from salary or through estimated tax payments on April 15, June 15, September 15, or January 15 of next year during the tax year. This one you want to see example 7-28 on page 7-38. Underpayment penalties. When taxpayers fall behind on their tax payments, they may be subject to an underpayment penalty. Tax laws provide some safe harbor provisions allowing taxpayers to avoid underpayment penalties if their withholdings and estimated tax payments equal or exceed one of the following two safe harbors. Safe harbor number one, 90% of their current tax liabilities, or number two, 100% of their previous year tax liability, 110% for individuals with AGI greater than $150,000. The first safe harbor requires that taxpayer must have paid at least 22.5%. 90% divided by 4 quarterly payment of 22.5% of the current year liability through withholdings and estimated tax payment by April 15 to avoid the underpayment penalty for the first quarter. Similarly, by June 15, September 15, and January 15, the taxpayer must have paid 45%, 67.5%, and 90% of the current year liability to avoid the underpayment penalty in the second, third, and fourth quarters. In determining taxpayers' prepayment for a quarter, tax withholdings are generally treated as though they were withheld evenly throughout the year. This one, see example 7-29, page 7-39. Taxpayers can calculate the underpayment penalty by multiplying the federal short-term interest rate plus 3% points by the amount tax underpayment per quarter and report the underpayment penalty owed on Form 2210. This one, please reference example 7-30 on pages 7-39 and 40. Taxpayers who either had no tax liability in the previous year or whose tax payable after subtracting their withholding amount but not estimated payment is less than $1,000 are not subject to the underpayment penalty. This one, example 7-31, page 7-40. So what will be the filing requirements? Individual taxpayers are required to file a tax return only if their gross income exceeds certain thresholds, which vary based on the taxpayer's filing status, age, and age. However, a taxpayer may prefer filing a tax return even when he or she is not required to do so. Individual tax returns are due on April 15 for calendar year individuals, the 15th day of the fourth month following year end. If the due date falls on Saturday, Sunday, or holiday, an automatic extension will apply. And extension gives the taxpayer additional time to file tax return but does not extend the due date for paying the taxes if any amount owed. What about late payment penalty? Number one, if taxpayer fails, so let's look at these late payment penalty and also the late filing penalty. For late filing, 5% of the tax owed per month up to 25% if not fraudulent. 15% of the tax owed per month up to 75%, again, is not if not fraudulent, which means that because you're fraudulent intent, then you have a late filing. No penalty will be imposed if no tax is due. For the late payment penalty, number one, if taxpayer fails to pay the entire balance of the tax owed by the original due date of the tax return, the tax law imposes a late payment penalty from the due date of the return until the taxpayer pays the tax. The late payment penalty equals 0.5% of the amount of tax owed for each month or the fraction thereof that the tax is not paid. Number 2, the combined maximum penalty allowed for late payment and late filing is 5% per month, 25% in total. For late payment and filing due to fraud, the combined maximum penalty for late payment and late filing is 15% per month, up to 75% total. This one we want to look at example 7-32 on page 7-41. Assume Courtney filed her tax return on April 10th and included a check with the return for $2,896 made payable to the United States Treasury. The $2,896 consisted of her pay tax liability of $2,866 and her $30 underpayment penalty. If Courtney had waited until May 1st to file her return and pay her taxes, what late filing and late payment penalty was she owed? So her combined late filing penalty and late payment penalty will be $143. So the original $2,866 late payment times the 5% of the 1 month or portion thereof. So there's only a half month, but it's going to count as 1 month. The combined late filing and late payment penalty is limited to 5% each month. So that will conclude our learning objective 5 for chapter 7, and that is the final video for this chapter. And you're more than welcome to ask me questions through virtual office or discussions. Thank you.